SCHD has been on fire in 2026, and it has completely turned around the negative sentiment from the past few years. The last video in this series was to celebrate the huge final dividend of 2025 and the 14 years of consecutive dividend growth for SCHD. And SCHD has crushed the total returns of the S&P 500 so far in 2026 by over 10%. This is not something we've seen lately. But not everything is soaring for SCHD. The first couple dividends this year left a lot to be desired, and I think we have a real chance of breaking our 15 years of dividend growth. We have a lot to dig into in this one. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. If you enjoy this content, then steamroll that like button, subscribe if you haven't already, and consider joining the channel membership. It helps keep this section short and sweet. You know what time it is. Let's grow. 2026 dividends. SCHD paid its second dividend of the year on June 29th. And the dividends received this year have been less than stellar. We're about to jump over to my screen to break it all down. But before we do that, I just want to remind everyone that SCHD has produced an incredible 10.6% dividend CAGR since its inception in 2011. When we zoom out and let compounding do its thing, SCHD still shines bright in the dividend ETF world. We'll start out here on my infamous Retire on SCHD spreadsheet. And now many of those that watch this channel know I have a separate series on this, so I'm going to keep this high level for today. We're not going to dive deep into the scenario, but I just want to show how powerful zooming out is as we consider price and dividend compounding over the years. So in this scenario, this couple retired at the end of 2013, and all these prices and numbers are split adjusted properly for the 3-to-1 split that took place a while back with SCHD. The couple had $1 million. I think they took half and put it into the market, VOO, stuff like that, and cash and whatever they needed. And then the other half they put into SCHD. At the time, purchased them a split adjusted 52,929 shares. Now, the point of this spreadsheet is that there is no dividends reinvested. They're taking this money and they're spending it. So they forever have this amount of shares and they don't put another penny in beyond their 500,000. 2012 is a placeholder. Really, the first year they benefit is 2013. And you can see as we zoom out, we go from 30 cents a share to over $1 a share by the end of 2025. This thing has over tripled its dividends. And the price itself, they purchased at the end of 2012 at that $9.45, and it's up to $27.43 by the end of 2025. And many people know we don't dive into updated information because I update this annually. It's $32 a share now. So this thing has soared even more than this spreadsheet shows. But the power here is in the dividends. They went from $15,900 and spent it and had fun in retirement. And that number compounds at crazy amounts when we go year by year. All of a sudden you're at 30,000, and then it jumps to 40,000, over 50,000, and then finally beyond $55,000 per year for those same exact shares. That's what happens when the dividend paid compounds over time. Now, I started with this all zoomed out for a reason. We're going to dive into the disappointing dividends so far in 2026, but I just wanted to show how everything ties together. In 2026, when I add that at the end of the year, we'll hopefully see the 15th year of dividend increases in a row. Things aren't looking too stable in that regard. And before we jump over, I just want to mention that the price alone, with no reinvestments, those same exact shares, by the end of 2025, and this is actually inaccurate, it is 12/31, this had been updated, is worth almost $1.5 million. So now it's over 1.5. I think it's like 1.8 or something like that, real time. Just the price alone has gone up over $1 million. It's fed them $432,000 of dividends. You can see that here, and that does exclude the placeholder. And their total return is almost $1.5 million. Well, they just sit and do absolutely nothing. But we all know that we're here for the recent dividends. And so that's exactly what we will dive into right now. You can see that I do have every other year. I just changed the color to make it a little easier on the eyes. And this is just the pay date here and the ex-dividend date. And here's the amount. Of course, all split adjusted for the historical dividends as we scroll all the way up. The most recent dividend, for this video's sake, on June 29th, we were just paid that this week, was 25.25 cents per share. And we can see that that was down from the Q2 last year of 26.02 cents per share. That dividend over here on the quarter over quarter was down 3%. Now, Q1 was up 3.3%. And when you add these two dividends that have been paid so far this year compared to these two dividends from last year, we are virtually tied. I think we're like 0.009 or 4 or something ahead, but it's basically deadlocked at 0% total for the year. And the thing that worries me, as many know, this dividend that was just paid, the 25.25 cents in Q2, is technically the first dividend based on the new holdings because we do the reconstitution on the third Friday of March every year. So Q1 of each year is actually primarily based on the old holdings. Before this March reconstitution that we did in 2026, the 2025 reconstitution really paid these dividends with the new holdings. So being down 3% on the more relevant dividend payment to what we're holding now is alarming, but I will say there is some precedent to break through and to ultimately raise the dividends for the year. Now I'm reminded of 2023. You can see in Q2 of 2023, we received 22.16 cents per share. And Q2 the year before, it was actually 23.46. So we were down 5.6% after being up a decent amount in the first quarter, in this case 15%. Now we were only up 3.3% this first quarter, but the point being this was the first dividend payment based on the new holdings, much like this one today, and it was down, but it ended up just saving the day with a positive third and fourth quarter dividend. And if we have something like this, we will have dividend growth technically, because right now we're about flat. And the next thing I want to look at is this CAGR all, and I do this accurate to the 0.25 of each quarter. So this will be more accurate than many of the other videos you see or stuff you see online. Since inception, we're at 10.57% lifetime CAGR. The alarming thing is we were consistently in the 12s up here, and then we dropped to 11.41, 11.48, just below 11 recently, and now we're at 10.5. And that doesn't seem like a big fall, but you can see the same concept with the 10-year CAGR. We're down to 10.24. But what worries me a little bit, I have to admit, is this 1-year CAGR has consistently been lower single digits lately, and this is just a trailing 12-month. So it's the last 4 versus the 4 before. You can see as you go up, it just grabs the new trailing 12 months. And this is a little bit of an alarming change after consistently being up for a while, and then you have your drops, but then you go back up. And I guess historically you've had some of that, but we were pretty high consistently on the 1, the 3 up to 14, 16, then down to 14, 9, 9, 8, 7, and now 6.52. So it's looking a little more like VYM lately, and I don't like that. And the 5-year, same story. So I am a strong proponent of staying the course. I do put weight in this long-term data, as many of you out there know, considerably more than the short-term noise. But one must admit that this 10.5 has not exactly been 10.5 lately. I think we're surviving by some early success right now, and NAs just mean you don't have enough for the full look back, by the way. Because for example, like this 10.69, nice, you have to have these 5 over 5 years ago, so it just started having enough data here. These NAs aren't any shady business, it just needs the full look back. As an SCHD mainstay, I must admit that I am mildly concerned with our trends, and I hope to see this change. Now, the price has been incredible. We don't jump into that in this video. So overall, I'm happy with SCHD, don't get me wrong. but I really want to see that 15-year streak continue, because I love to say that you have never, and I mean ever, once received fewer dollars from the same shares of SCHD in each subsequent year for 14 years in a row. And I would love to be able to put that 15 in that same category. But yeah, here's to hoping that we turn around these dividends. Right now, we got to call it what it is. It's not looking too pretty. But to play devil's advocate to my devil's advocate, when we zoom out, it's looking a lot nicer. And remember, our portfolio will have more than just SCHD. And that, my friends, is the final piece of what makes this thing amazing. And I've been showing this fund overlap by weight. So this is weighted overlap, which is all that matters in the overlap world. Not the amount of holdings that are overlapped, but how much weight they have. And this top row up here are my favorite growth ETFs, and I hold VGT and QQQM, at least the QQQM index. I do not personally hold SCHG, but I include it because it is a quality multi-sector growth ETF. And then my favorite market fund or cornerstone, and that's VOO. Now look at SCHD. You'll notice that on days when these ones are up, SCHD is usually down and vice versa. Well, one of the reasons is there's very little overlap. You can see a 3% overlap with VGT, my favorite growth, 5% with QQQM, just 1%, I think it's United Health Group, with SCHG, and only 8% with the market. That's incredible. I mean, that's pretty rare for any ETF, because the market, the S&P 500, by weight has all the big companies, value ones, growth ones. This reflects the market as a whole, which SCHD is just completely different than. You can see an average overlap of 4%. Now, VYM is probably the next best of my favorite value holdings to counterbalance growth. And you can see, I won't go through every one, but it's at 19%. To SCHD's 4. You can't make this stuff up. And then DGRO, even more of a market fund. You can see a 42 overlap with VOO at 24. FDVV, same concept here, an average of 28% and nearly 40 with the market. And then VIG, another hybrid market fund. And that's why these are all very low yield. Some of them grow their dividends, but you're just getting a lot of the market, where SCHD gives you true value, much like VTV and a few other ones would, to counterbalance these big boys. And then VOO, you can have as much as you want. But if you go 50% VOO, 50% VIG, you're 75% VOO. I don't like that. I like having true value and true growth. That's my story, and I'm sticking with it. SCHD remains my favorite and only value holding in my portfolio. I've yet to find another ETF that complements my growth holdings as well, but it has weirdly flipped its pros and cons in 2026. Stranger things. The dividend CAGR of SCHD sits at 0% so far in 2026, yet the total return has climbed to 19%. And as any SCHD fan or hater knows, both of these narratives have been flipped upside down compared to the past few years. I said last year that I thought it would be a great time to continue share accumulation of SCHD with the stagnant share price and the inevitable reversion to the mean. Truth be told, I think it's smart to accumulate shares to your target allocations in any market conditions. You will rebalance naturally as you purchase your most beat up ETFs in the mix. And the same goes for SCHD. I will continue accumulating this compounding monster along with my other favorite positions. The breaking news will continue to flash buy and sell like crazy, but my methodology remains the same every day of every year. Stick to your well thought out system to beat this simple game. And speaking of those of you that are winning, I'd like to give a huge shout out to you incredible 37 channel members. We don't have any new members this week, and we lost a couple soldiers along the way. But you 37 are one of the major reasons why I'm able to produce these videos and continue having fun. I love this community, and I really, really do appreciate you. I can't stress it enough. And then don't forget to hit up that Seeking Alpha sale. It ends July 10th. You can save 25% on Seeking Alpha Premium. Try it for free during the sale window with the link pinned below. If you like what you see, you save 25%, most importantly, and you also hook me up because it is an affiliate link. And same concept with Snowball Analytics. If you want to track your individual portfolio positions, I use this for my HODL Factory. that I'm crushing the market, by the way, by over 35% since inception and 15% year to date alone. Now, that has nothing to do with using Snowball Analytics, but it is cool to see the results as time goes. And check out one of these two videos to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you in the next one. Peace.